OPEC Plus announces major production hike. What's next for oil markets? The oil market is on the brink of a major shift as OPEC Plus announces a significant increase in production. But here's where it gets controversial. While the group races to reclaim market share, there's growing uncertainty about what their next strategic steps will be amid the looming threat of an oversupplied global market. In a recent video conference, Saudi Arabia and its fellow OPEC Plus members agreed to boost output by 547,000 barrels per day starting in September. This move finalizes the rapid rollback of a substantial 2.2 million barrel per day cut that was initially imposed by 8 member countries in 2023. Additionally, this production surge incorporates the gradual integration of a special production quota increase granted to the United Arab Emirates. To put this into perspective, these decisions highlight the delicate balancing act OPEC Plus faces, trying to capitalize on market opportunities without flooding the market and driving prices down. And this is the part most people miss. While increasing supply seems like a straightforward plan to grab more sales, it could backfire if it leads to a surplus, causing prices to slide and potentially triggering internal disagreements within the coalition. It raises some key questions. Is OPEC Plus playing a long game with this aggressive supply boost? Or are they risking short-term gains that might destabilize the market? How will these production policies affect global oil prices, consumers, and the energy transition debate? We invite you to weigh in. Is this the smartest move for OPEC Plus in today's complex market, or does it signal trouble ahead? Join the conversation and share your thoughts below. OPEC Plus boosts oil production by 547,000 BPD. Market share strategy amid Russia-Ukraine tensions. OPEC Plus is pushing for another major oil output increase to secure market share. But the debate over its impact is far from over. On August 3rd, Reuters reported that OPEC Plus agreed to boost September production by 547,000 barrels per day, marking the latest in a series of rapid output hikes aimed at reclaiming lost ground. This decision comes amid growing concerns over supply disruptions linked to Russia, as Washington pressures India to stop buying Russian oil, a move part of broader efforts to broker peace between Moscow and Kyiv. The 8-member OPEC Plus group, including Saudi Arabia, the UAE, and others, convened virtually on July 28, with President Donald Trump urging a deal by August 8, signaling heightened geopolitical stakes. The decision to raise output follows a reversal of the group's largest output cuts, which had been in place for years to stabilize prices. In response to U.S. demands, OPEC Plus announced an additional 2.5 million barrels per day increase for the UAE, bringing its total output hike to 5 million barrels per day. This represents about 2.4% of global demand, a significant shift from previous years. The group's actions are framed as a strategic move to counter rising global energy prices, which have remained elevated despite increased production. Brent crude closed near $70 per barrel on Friday, up from a 2025 low of $58 in April, driven by seasonal demand and investor optimism. Amrita Sen of Energy Aspects noted that the $70 price level provides OPEC Plus with confidence in market fundamentals, though tight stock levels and geopolitical tensions remain critical factors. The 8 countries are set to meet again on September 7th, potentially reinstating another round of output cuts totaling 1.65 million barrels per day. Though these cuts, currently in effect until 2026, are part of a broader strategy to balance supply and demand. The group's recent maneuvers reflect a complex interplay of economic pressures, geopolitical dynamics, and industry expectations. While OPEC Plus has successfully reversed its largest cut without triggering price crashes, the next challenge will be deciding when and if to unwind the remaining 1.66 million barrels of cuts, all while navigating the volatile landscape of international relations. This decision will be closely watched, particularly as the U.S. government's stance on Russia becomes a focal point for global markets. The article highlights the tension between short-term gains and long-term stability, with critics questioning whether such aggressive output hikes will ultimately benefit consumers or exacerbate energy insecurity. As the world grapples with rising energy costs and geopolitical uncertainty, the OPEC Plus saga underscores the delicate balance between supply management and global economic health. OPEC Plus increases oil production. What it means for gas prices. Global oil markets just took a surprising turn, and it could mean cheaper gas for consumers later this year. In a move that's already stirring debate among energy experts and policymakers, OPEC Plus has decided to increase oil output by 548,000 barrels per day starting in September. This decision marks a significant shift from the group's long-standing strategy of limiting production to keep oil prices high. For years, OPEC Plus deliberately reduced oil supply to stabilize or boost global oil prices, especially during periods of economic uncertainty or weak demand. However, earlier this year, the group began to change its approach under mounting pressure, particularly from former U.S. President Donald Trump, who publicly urged an increase in production to help ease fuel costs for American consumers. But here's where it gets controversial. Some analysts argue that this latest move may be more about political influence than economic necessity. With global attention focused on the ongoing war in Ukraine, the United States has been pushing hard for Moscow to return to the negotiating table. By increasing oil supply, OPEC Plus might be trying to ease inflationary pressures and indirectly encourage diplomatic progress. Though Russia, a key player in OPEC Plus, continues its military campaign in Ukraine. Saudi Arabia, as the most powerful voice within OPEC, plays a central role in shaping these decisions. Alongside Russia, the leading non-OPEC nation in the alliance, the kingdom wields significant sway over global energy markets. Together, these two countries have often steered the direction of the 22-member coalition, sometimes sparking backlash from Western governments and environmental advocates. And this is the part most people miss. While high oil production could lead to lower gas prices at the pump, it also raises concerns about the world's commitment to climate goals. More oil in the market means more fossil fuels being burned, which could undermine international efforts to reduce carbon emissions. So what does this mean for you? If you've been watching gas prices closely, this boost in supply could offer some relief by the end of the year. Still, it's worth asking, is short-term economic relief worth the potential long-term environmental cost? We're keeping a close eye on how this decision unfolds and will bring you updates as soon as more details emerge. In the meantime, we'd love to hear your thoughts. Do you think OPEC Plus made the right call, or is this another example of politics overriding planet-friendly policies? Share your take in the comments below.